Hey guys, I just want to let you know I bought 100 shares of mdgs today. Um, I think that brings me to 400 shares with an average buy price of 420, maybe somewhere around there. So I'm still underwater. I'm averaging down. We'll see what happens. And I also bought 10 shares of usoi. I should have bought this the other day, but I kind of forgot, because I definitely think the oil prices will go higher. Um, One thing I never mentioned was this has a really high expense ratio. That's almost 1% expense ratio. So that is super duper high. I mean, if you look at like BOO, for example, it might be like 0.006 or something like that, or maybe it's not that low. Let's see. Let's see what it is. 0.04 expense ratio. But still, 0.85 is very, very high. But you know, if you bought it at 70, you're looking pretty. And it goes back to 93, we're looking pretty. Um, plus it's got a pretty good yield. The thing that's nice about this right now is the net. This is NAV. The net asset value is $83.60. So if you're buying it right today, you are basically buying it for less than the net asset value. So really, if you're buying it today, you already made $1.20 per share. So we got 10 shares, so $1.20. What we made 11. We're really up $11, really. And I think the ex-dividend date, coupon date, I guess you'd say, is the 19th. So today's the 17th. So we're in before the ex date. The 20th would be the record date, and the 25th is the payment date. And the current expected yield is the yearly yield, I guess, is 18%. $1.34. So we got 10 shares. So what's that? $13. I mean, it's not a lot, but it's every little bit in the kitty adds up. Every little bit in the kitty adds up. And the reason I like this, guys, and this is so high because they did a reverse split a while back, but and I might be just 100% wrong, but this was back when the pandemic hit, that we took a big doo-doo right here. It went from 436 down to 91. It really, these aren't the real prices because, like I said, we did a reverse split, but this basically follows oil, which is let me do over here. U.S. oil here, and let me see. Am I looking at a max chart? Let's compare apples to apples now. And this is hard to see because they might have did a reverse split too. I don't know, but like look at from like all right. So June 1st, 2020. June 1st, 2020. You see this took a big dump. I mean, it was like 400 and some, and it went to under 100. Um, but here, um, it barely fell at all. I mean, it's hard to kind of see. Let me zoom in. This is where the split was, a 1-to-8 split. But you can see it fell, from 100 to, all right, it did fall pretty far. But the thing is, this recovered. It went from $30 up to 80, right? So it basically fell 75%, but then it recovered like 50%. Like this one, this is USOI. It basically fell, a huge amount, and then it just stayed flat. It never went back up. Whereas this one did, and this is the underlying security, USO, and then this is USOI. This is the covered call ETN, but its underlying asset is USO. This one. So this thing fell, but then it recovered up here, and now it's kind of stayed flat. But I'm just saying it recovered from the pandemic. This is the start of the pandemic right here, and this is the pandemic right here. But this one never recovered. So not only is this thing paying, like a 20%, this thing said 18%, but not only is it paying like almost a 20% dividend or coupon or however you want to slice it, but I believe this thing, it may not go back to 400, but it might go to 2, it might go to 3. So I think this has the potential to 2 or 3x while you're getting a 20% dividend. I mean, it sounds crazy. And I think this is a high risk because it is a covered call ETN. And I think anytime you're dealing with leverage, derivatives, any kind of thing like that, it's riskier than saying just buying the underlying security, because this thing could go to zero. SLVO was another one I kind of liked before. I had it before. Silver really doesn't give a return, but this one, because of the covered call thing, it wasn't as good as USOI, but as you can see here, and this is the gold one, it gives a 30-cent coupon, and you're paying $70. So you can see why I like USOI a little better, because the payout is a lot better. But silver's taking a dump too, and silver is one thing that I think is undervalued as well. And as you can see, the NAV is on this one is 66, so we're over the NAV by $5 or what, something like that. You can see the low was 65 and the high was 90, but you can see what the net asset value is. But anyway, so I invested, I don't know, $1,200 today, $1,100, somewhere around there. 10 shares of USOI was probably $800, and then I have bought mdgs. And this thing could possibly be zero too. I mean, but I think this one has a potential to 100x as well. Why? Because they have like 50 to 60% ownership in like I don't know, 10 or 12 different ventures. So depending on how those ventures pan out, I mean, here's one 19 days ago. Acquired 60% interest in a real estate property in Miami. So they own 60% of that. They increased their ownership in AI systems to 36%. On and on and on. I mean, all these little startup companies. Um, and they had a terrible year. It looks like. I mean, this was back in May, but they had almost 100 million in revenue. They lost 10 million. Last year they had a $7 million profit. I mean, in 2001. So it's a bunch of bad news, and guess what? You know, that's when I love to buy, because this thing is hated. Look at it. I mean, they've done so many reverse splits that now you know no one paid $2,000 for this thing, but that because they've done so many reverse splits, you know, anytime you do a reverse split, it changes all the history too. And if I go to full screen, it might even show me. Look at all these splits. All right, so back here we did a 1 to 10 split. Then we did a 1 to 4 split. Look at these spikes of volume right here. I don't know what happened during those times, but a 1 to 15 split. Now look, this was that huge dividend, and at the time, I want to say, I think I had $5,000 invested. I'm not sure how many shares I had, but my dividend was around $500. So you can figure out how many shares I had, kind of. But yeah, they paid a massive dividend. I mean, it was like several $1 million dividend, like a 1.6 million dollar dividend. And if you look at the market cap of the company, if this is accurate, it says 5.7 million. I mean, they just paid a one, you know, last year or whatever, December 19 or whatever it was, they paid a 1.6, almost a $2 million dividend, and here the market cap is 6 million. So I think the better thing to have done, and I don't think that they were allowed to. I think they wanted to pay a dividend and do share buybacks, but the share buybacks got denied for whatever reason. I forgot, but can you imagine today doing share buybacks and basically your ownership in the company goes up by I don't know, 30% or something without you having to do anything? Because if the market cap is say 6 million and they do a $2 million share buyback, I mean, your ownership in the company just goes up by a third, by 33%, without you having to spend another penny. Let's see what some of the forum commenters say. Garbage stock. Sewage stock. This is probably the worst stock you can ever buy. Remember, guys, this is the same thing that happened when on go back and look on the DAC forums, DAC, and you can see these type of comments were the same comments. Garbage stock, sewage stock. This is probably the worst stock you can ever buy. This is one that you got to pinch your nose, look the other way, and hit the buy button. Knowing that it's probably worth nothing. It's probably worth nothing. It might be worth zero. But then again, what you know, it might be a fraud, it might be a scam, I don't know. But I think it has the potential to 100x. And the thing that was weird to me back when Tesla was going bonkers, I mean, this company had a 50% ownership in an EV deal, electric vehicle deal, and nobody ever touched it. You know, no one ever talked about it. But every other EV, whatever, or green thing, or wind thing, or solar thing, you know, was going crazy. Scam company. All right, let's go back. Garbage stock, sewage stock. Probably the worst stock you can ever buy. And of course, all I see is my videos. I'm trying to find the one the original. You can see the videos I've watched. All right, let's go to my video. Guess what, guys? This was my video. One of the first ones I did, I think. Got 3 views 3 months ago, 37 subscribers. You know, you're looking for what's ugly, cheap, undervalued, hated.
Ugly, cheap, boring, out of fashion, small and obscure, or otherwise on the other side of the existing finance industry. If it's on the recommended list, we're big.
Unfortunately, the volume, and this is
how to get superior financial returns, then almost all, or today and the future is that essentially 75 years ago, Ben Graham was more right about the nature of the development of financial markets and how to get.
Here it is. Here's the original.
You are looking for things that are ugly, cheap, boring, out of fashion, small and obscure, or otherwise on the other side of the existing finance industry mania. If it's on the recommended list of one of the big retail brokerages, my advice to you is watch out. Value investing consists of a basic approach to the process of investing. The first thing you have to do is
So there we go, guys. There it is. So we're looking for what's ugly, what's cheap, small and obscure, garbage stock, sewage stock. This is probably the worst stock you can ever buy. And it might be a scam. You know, I might be this was me. I had 10,000 shares. So maybe my dividend was more than 500. I don't know. I don't know. But just to show you guys, let's go. I don't know if we can go back a couple years. They've probably been talking about me this whole time, and I hadn't even been on to respond to the critics. But let's go back to maybe like July 2020, 3 years ago. I gotta scroll down a lot. Yeah, I mean, that's the problem with some of these penny stocks, or, you know, like some of them might be scams. But I just do my research, and if I think it's a good deal, if I think it's undervalued, I'm gonna take a shot at it. And sometimes I'm right, and you know, sometimes I'm wrong. Now there's another guy on here that had my same name, but that was not me. And a lot of these people are probably millionaire, or if they weren't millionaires, they were definitely millionaires after a 30x increase. Like that one's not not me. Let me see. Come on, come on. I mean, when something 30x's, your board gets a lot bigger. But I mean, this thing was so dead. I mean, the last comment might have been like a year prior. All right, we're getting close now. It was probably early 2020 is what I'm thinking, when I was making the comments, when it was in the dumps. But you look at all the bullish stuff, bullish, 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 bullish. But that was not the case. That was not the case. We're almost there, guys. Takes a while to go through 3 years of comments. And like I said, most of these comments are idiots. They're pumpers. They were calling me a pumper. Um, this would be really embarrassing if I tell you I commented on this thing and then I can't even find any of my comments. But it's not showing all of them. It's a lot of them that are hidden. We're still in 2021, so we've still got a ways to go. And once it started going up, I didn't comment any anymore. But the point of what I'm trying to tell you is when I was buying this thing, it was just like MDGS's board is now. This is a garbage stock. It was, in fact, it was. I can't remember who it was. Let's see if I can find the article. But see, like all these comments are in recent times. When I bought it, here, this might be one of them. Now, I may not be able to find it, but it was basically an article that was written by like Seeking Alpha or someone, and it was like the worst stock to buy, the worst stock ever to buy or something like that. And that's funny that the same people that were criticizing the stock, a year or two earlier, are now pumping it, pumping it, pumping it. Pump, pump, pump it up. I wish I would have sorted this by date or something. I remember there was a guy named John on this board that was pretty smart. I can't remember if that was him or not, but it was a guy that he had bought Disney or something, and years ago, 30 years ago, 40 years ago, and every year he would just add 1,000 shares every year, and that turned him into a millionaire. Buying a good company. All right, we're still in 2021. See, there's like 3 more replies, so there's actually more replies here they're not showing. It was Zach's. Zach's. You know, if you get your stock tips from Zach's, uh, um, I'm sure there was other. It wasn't just Zach's, but it's funny because you can almost guarantee that when they say this is the worst stock you can possibly buy, that's actually probably the best thing you can do is buy whatever they say is the worst. And why is that? Because it's probably undervalued usually. You know, it's usually hated. It's got all kinds of bad news. I mean, this thing was in bankruptcy. The banks owned it, most of it. They still had a ton of debt, $1 billion in debt. Um, so it was a lot of bad news. And anytime you have only bad news, whenever time you have a little bit of good news, it's going to do good. I don't remember when I first bought this thing. It might have been in 2019 or maybe even 18. Um, I'm not sure exactly. And sorry guys, I've just been scrolling this whole time. We're almost there. Like I said, when the stock 30x's, I mean the boards are going to take off. But when I was commenting, like there might be like one comment in the previous year, or one comment like in the previous 6 months. Um, Everything was negative. There wasn't any positiveness at all. Like I said, most of these boards, most of them are complete idiots. They're complete morons. But you know, for every 100 comments, there's probably one or two, you know, really smart people up here that, um, and some of my information that I would get would be from these boards. And see what they say. You know, sometimes they might link an article or, um, so you can see this guy said PE of 2. You know, I love low PEs. Um, Sorry guys, this thing's kind of running long. I didn't realize I was going to be scrolling through the comments for damn 10 minutes. He said some dope just sold 7 shares at 97 cents to close. And this thing went over $100, so those 7 shares would have been $700, and he sold it for what, $5 or something. I bet he's kind of kicking himself now. Oh my gosh. I'm sorry guys, it's taking so long. It's taking a long time to load, and But one of the reasons why I'm not 100% sure, because, like I said, I stopped following it after I got out. But one of the reasons it went up, and I didn't know this at the time, was they had ownership in another company that just took off like crazy. And I'm not sure if they had a majority share or like just 10% ownership or what, but they had assets in another business that took off, and that was one of the main reasons why this thing took off. I mean, I thought it was a 10 bagger within the next 5 years. And so when I buy at three and it goes to set, and I sell some at $7, $8, and $9, I was thinking about getting back in at nine, and then I was like, no, just get out. And that was a bad mistake. But when you're playing with all the money you have in the world, and you, say you had 2,000 shares, and you sold it and made a profit, then you just rebuy, go back in, and now your $5,000 you invested to get 2,000 shares is now $5,000 to get 300 shares, and that's tough for me to get back in there. I should have just rode the wave, but like I said, when you're playing with all the money you got in the world, I mean, I was making over $1,000 a day in unrealized profit. So I didn't, and at the time, I thought the whole U.S. market would collapse. Little did I know that the government was going to increase the money supply 40% and basically tax the savers in this country 40% on the tax on their savings. But this thing is so slow to load. Because there's so many damn comments, and like I said, when something goes up 30x, then there's excitement. Then everyone got FOMO, fear of missing out, and they all want to jump in. 52-week high, break 70 today. All right, so we've still got a very long ways to go, but and I don't want to torture you guys with um, me just going through all these comments here, because it might take it a while, because it's just taking longer and longer to load. Um, but when I bought it was $3.50, and right here these posts it's $70. Come on. See, Zach owned some Zim shares, or still owns some Zim shares, and Zim was doing good. So, and you might not know what some companies own. You know, they might have some investments that are kind of hidden from the public. I don't know if this was public at the time, and maybe I just missed it or what. But and this guy started buying basically when I got out. You can see why the thing took off, because they were, look, $14 a share earnings. I still haven't seen a single post of mine yet. And basically, I'm just on Yahoo Finance. I go to comments, and you just scroll down to see the comments. Oh my gosh, does it stop at 2000? Does it not go back any further? What? Oh my gosh. I just spent all this time going back. And then it doesn't even go back that far. Yep. Yep. My comments are lost in cyberspace forever. Yeah. But yeah, I was looking for July, around this time, July 1st, 2020, because this was, this is when I was buying 350, and then almost, not even, but months, not even, long afterwards, from July to August, went from $3.50 to 83, and then in March 102. So I mean, this was just dramatic, and I thought the company was worth $2 billion, and when I bought it down here, the market cap was 100 million. And I thought that the company was worth $2 billion, but they had $1 billion in debt. So I figured the company was worth at least $1 billion. And since the market cap was 100 million at the time, that's where I get my 10x from. But I thought it was going to take 5 years to get there. And when you don't have much money, you usually sell something that that's good for something else that you think is even better. So I had made some profit on DAC. I had sold it $7, $8, $9 or whatever it was, and then bought something that I thought was even cheaper. But the painful lesson I've learned with Sears and DAC is, when you got a winner, sometimes you just got to ride that winner. And even if it looks crazy, and kind of like Tesla does crazy things, when they were trading at 1,000 times earnings, and actually their earnings were negative, and it's, you know, bigger than all the other car companies in the world put together. That's nuts. That's craziness. But you know, I should have rode the wave, and then maybe at this pullback here, you know, maybe the first pullback. Let's see, like when it gets to 75 and drops to like 67. Okay, I'm out. I'll sell 20% maybe, or 50% or whatever, and then it keeps going higher, and then maybe you know, maybe here you sell some more, and then it gets all the way to 102. Maybe take another profit and sell some more, and then let a little bit just ride and see what happens. You still get a 4% dividend, but at the time, I mean, if you're buying down here, I don't even know what the dividend yield is for if I would still had those shares at $3.50. I mean, granted, that 2,000 shares at 100 would be worth 200,000. But I just wonder what the dividend yield would be if you're paying $66 and getting a 4% yield. You know what the yield is down here. I mean, I might have been getting I don't know, 30% dividend yield or something ridiculous. Because I mean, you know, I bought the shares at $3.50. They're paying a $3 dividend. I mean, that's kind of like, you know, Warren Buffett buying the Coca-Cola for $1.50 or whatever he paid for it back then, and you know, Coca-Cola today, you know, pays $1.84 dividend. So he bought it at 88, 89, 94. $1 billion, which was actually 37% of Berkshire's portfolio at that time. So, you know, oh, you got to have 10% in industrials. You got to have 10% in financials. You got to have. No, you don't, dumbass. Bubba's got 40% of his net worth in this one company at this time, Coca-Cola. The the average share price was 43. Let's see, 1988. So you can see how many reverse splits they've done because let's say he bought it in January 1st of 88. Coca-Cola was $2.39. And as you can see, they pay $1.84 a year. So, I mean, he's basically getting what he paid for it, in dividends every year, which is this craziness. But so if this was $44 back then, I don't know how many splits or whatever they've done since then. But I mean, just imagine all the dividends he's gotten from that company. And it's like this only goes back to 2005. Let me see. Back then when Buffett bought it, they were paying a penny in dividends. And so, but yeah, he had Geico, he had Coca-Cola, he had the Washington Post. I'm not sure. He had, I guess this is the news network, ABC. And I'm not sure what this is. But you can see the profit margins, so I can understand why he why he bought it. But yeah, that's just crazy. How the price that he paid, in '88, was $2 and something, and then today they're paying almost $2 in dividends. But anyway, sorry guys, I couldn't find my comments in DAC, but if you had gone back a little further, we would have seen them. But anyway, thanks for watching.